hello and welcome to this Moneycontrol live stream. You're watching Morning Trade with me, Nandita Khemka. Over the next 30 minutes, we'll be talking about the cues for trade, the stocks that have been focused, including PB Fintech, BPCL, and of course an MC exclusive for you guys, wherein we have reported that PE giants are looking at a stake in Glenmark Life Sciences. We'll be getting you more details on that, and we'll of course be getting all your stock-related queries answered by a technical expert on the show. So if you have any queries, send them in to us on our YouTube feed and we'll have them addressed. But before we do all that, as usual, let's take a look at the top headlines at this hour. Wall Street ends mixed even as meeting on raising the US debt ceiling ends in a stalemate. Asian markets trade largely higher while the SGX Nifty is suggesting a positive start for the Indian market. Strong volume growth is likely to drive what is expected to be a robust fourth quarter for Ashok Leyland. In key results to watch, Biocon, NMDC and Dixon Technologies will be reporting fourth quarter numbers today. Prices of electric two-wheelers set to rise as government cuts subsidies. Demand incentives cut from 15,000 rupees to 10,000 per kilowatt hour. Cap on incentives reduced from 40% to 15%. The changes will be applicable to all electric two-wheelers registered after 1st of June. The exercise to exchange or deposit a 2,000 rupee note starts today. Banks will exchange up to 10 2,000 rupee notes at a time till the 30th of September, while there is no limit on the amount of money deposited. No ID or KYC will be required for deposits or exchange. Let's now discuss some pharma stocks in details now. We are joined by Anubhav Sahu of Moneycontrol Pro, who tracks this space very closely. Good morning, Anubhav. Good to have you on the show. Divi's Labs reported a disappointing set of numbers, but the management has given fairly strong guidance when it comes to its gross margins, and the stock, of course, did take heart from that and rallied somewhere around 5% or thereabouts yesterday. So what should one be doing with this stock, given the fact that valuations are a little stretched and it looks a tad bit expensive compared to its peers in the pharma space?
Good morning, Nandita. I think one of the stock to watch in the pharma space is Divi's Lab, and not only Divi's Lab. I mean, a scores of stocks which have got impacted by the closure of COVID-related supplies. So whether it is Gland Pharma or Laurus Labs in the past we have seen. Divi's Lab, so on Y-on-Y basis there was a drop in financials, and that was mainly because of the last year they had the benefit of supplying molnupiravir molecule, which was not only material but also high margin. And so if you look on a YY basis, there was a big drop as far as financials are concerned, as also on the margin front. Sequentially, however, there has been some improvement for both the divisions, the generic API business and custom synthesis. Now, if we look at their margins, the EBITDA margins right now holding up close to 25%. And if we just look to the period how it was prevailing before COVID, then that time company was posting in the range of 35 to 38%. So I think it's not just about the COVID drug, but also because of the prevailing pricing pressure as well as high cost inventory, which has been impacting the company. So I think the key point is how is the journey going to be as well as going back to 35% kind of EBITDA margin. Management says that it could take about a year. We think that probably it could take longer, but that's something which one needs to watch. As far as investors are concerned, I think there are some short-term growth drivers, short to medium-term growth drivers, which investors can keep and watch on. One is their quoted project on contrast media, which has an application in X-rays scans and MRI scans. This is something to watch at. They have already started commercializing that, and this is something which can pick up in coming quarters. Secondly, they are quite positive on certain APIs, wherein they have, because of their expertise on green chemistry and all, have been able to keep a cap on impurities, and probably that is an area to watch what kind of material upside they can get from there. And thirdly, they continue to be focused on off-patent APIs. Or the APIs which will get off patent in next 2 to 5 years, which management says the business size is of the order of $20-25 billion, as well as the APIs which will go off patent. Having said that, I think the valuations are certainly ahead of fundamentals right now. It is Divi is currently trading at close to 27 times EV by EBITDA for fiscal 25. And so probably what investors can do is either they can wait for a couple of quarters how the management is able to walk the talk as far as the guidance is concerned, or probably or either they can wait for better levels to get constructive on the stock.
Right, wait on the sidelines. That's the call on Divi's Labs. What about Laurus Labs? You covered this stock as well, Anubhav. Earnings weren't all that great, pretty much disappointing. And if you look at the stock, it has literally halved from its 52-week highs. What should one do with this stock after the earnings?
Yeah, in case of Laurus Labs, again, the similar story as far as the exposure or the fading of tailwind from the COVID opportunity is concerned, and this got reflected in their Q4 number this time, wherein there was a sequential drop, and so they have been supplying quite substantially as far as Paxlovid molecules are concerned. So there was a closure of that purchase order. Other than that, the company had been facing headwinds for the base business, that is antiretroviral business, wherein they have been facing pricing and volume pressure for last few quarters, number of quarters back actually, and in reaction to that, and also in anticipation to the closure of this opportunity on COVID side, stock has corrected by about 50% in last 1 year. So we think that last part of that, or this kind of headwinds are already in price. Stock is currently trading at around 10 times EV by EBITDA for fiscal 25. So I think the reason for being constructive Laurus Lab are falling. First of all, the base CDMO business continues to be promising. They are working on 60 plus projects. They are investing heavily on this segment. They would be spending around 800 CR in this fiscal year itself. And in the next 2 years, they would be completing 3 manufacturing facilities and 1 R&D center, and would be focusing on some of the niche opportunities in animal health and agrochemicals. Secondly, the anti-retroviral business, which I was talking about, wherein they face headwinds, the concern there seems to be bottoming out. So if you look at last 2 quarters, they have a sequential improvement, and they also have been qualified as the panel supplier for the global fund. So, so a material contribution would be possible, is expected in Q1 of this fiscal year. And thirdly, and most important, is that there is a case for operating leverage to play out, because they had spent around 2,000 CR in last 2 years. And so number of facilities, whether it is APIs or formulation, will pick up in this year. So probably these are the factors to watch.
Right. Well, with that, Anubhav, thanks a lot for taking out time and putting things into perspective for us. Let's also get on board our technical expert for today, Sacchitanand Uttekar of Tradebulls Securities is joining in this morning. Good morning, Sacchitanand. Good to have you on the show as always. Yesterday, we did manage to end above that 18,300 mark, and SGX Nifty is hinting at a 30 to 40 point uptick on the index. But do you think we can, look at levels of 18,400 in today's session, given the kind of up move we saw yesterday was pretty strong?
Good morning, Nandita. Nandita, I think the trade setup is very clear. If you look at the way Nifty performed yesterday, despite of the fact that Bank Nifty was, finding itself difficult to reconquer that 44,100, 200 kind of a mark, there was continuous supply pressure there. But Nifty IT was, which gave a very strong breakout. We had Nifty Metals, which was contributing. We had Reliance, which saw a swing reversal there. So probably, this particular momentum that we have seen in yesterday's session should see some more follow-through legs. So what we are expecting is that the floor was already set at 18,100 a day before. Even yesterday's session, we have seen some strong, put writing at that particular juncture of 18,100. So the base for this particular expiry looks very confident. We may see this particular base getting elevated towards 18,200, and probably we may see an expiry somewhere close to 18,350, 18,500 within this particular band itself. So going by, the entire structure, we are expecting that sooner or later, Nifty could swing towards 18,480 comfortably. And that's why we still recommend, building long position here. From a trading perspective, I think 18,130 would be important. until unless we don't see a closing below this particular level, the momentum on the higher side stays intact. When it comes to Nifty Bank, yes, there is a cluster of resistance at 44,000, 44,100. But if you look at the options data, it is still supporting the fact that 43,500 to 44,500. That is the particular range wherein the Nifty Bank can also oscillate. But the highlight still remains Nifty IT. After almost 3 months, we have seen Nifty IT coming back to its 200-day exponential moving average. If you look at the weekly charts, it is exhibiting a very strong base formation. Again, the Nifty IT weekly RSI has given a confident breakout above that 51 mark. So that is indicating that we may see further legs when it comes to Nifty IT as well, and that could be one of the leading contributors for the Nifty. So we are confident on Nifty. We are expecting a swing towards 18,480, 18,600 eventually. But when it comes to Bank Nifty, I think the levels are capped around 44,500.
All right, levels of 44,500. That's where Bank Nifty is capped at. But, I want to straight in dive into some of the queries that we are getting on our feed. A couple of queries coming in on Gland Pharma. I was talking about the pharma space with my colleague Anubhav as well. But this one is particularly on Gland Pharma. Of course, we've seen this stock get hammered and, shaved off rather somewhere around 35% in a matter of 2 sessions after a very disappointing set of numbers. We have queries from Maheshwar Bhanu as well as Saurabh Gupta who want to know your thoughts on Gland Pharma. More downside, given the fact that we've seen quite a few downgrades also come in on the counter after the earnings.
Well, from a trend perspective, there's nothing to talk. In fact, there was a major support at around 1180, 1200 kind of a zone, and that particular support was breached by a gap. And since then, we have already seen 2 cap down openings. So from a pattern perspective, there's nothing to talk about. But in case if the stock has to see some reversal, then probably it should reconquer that particular level of around 1,080, 1,085 on the higher side. But as of now, the signs are still on the negative side. In case if someone is holding on to long positions, I would still recommend an exit. And probably, building some fresh long positions would be only warranted in case if we see a very strong reversal getting, shaped up in this particular area, and the level of around 1,080 gets violated in a day or so. The probability of that happening looks bleak. But as of now, I think the trend is majorly on the downside, and there are no signs of hope or reversal here. So even if someone is holding on to this particular stock, the advice would be to reduce it and exit and replace it with some other pharma names.
Well, prudent to get out of Gland Pharma then. Hope this answers your queries. Let's also take stock of the day. According to me, that should be PB Fintech, given the fact that it has reduced its loss. It has in fact reduced its loss significantly to somewhere around 9 crore rupees versus 219 crore rupees in the same quarter last year. Operating revenue has also grown at a rate of 60% or thereabouts, pretty strong. In fact, adjusted EBITDA has seen a break even at 28 crore rupees or thereabouts, and the company is pretty hopeful of turning into profitability in the current fiscal itself. If you look at the stock, Sacchitanand, it has rallied somewhere around 35 to 36% on a YTD basis, and on a monthly basis also it's done pretty well. Would you say that the earnings would provide a booster shot for the stock, and now we could expect it to make a dash towards its 52-week highs or thereabouts?
Well, the structure is fairly positive. In fact, since last 2 months, we have not seen any major moves here. But the consolidation above that 20-month exponential moving average has been healthy, which is right now placed at around 580. So unless we don't see a closing below 580, I think the structure still looks confident. On the higher side, there could be a move or swing towards 710. And probably, this would be, a good juncture wherein the stock can be accumulated from a trading perspective. The stop loss for the trade should be placed at around 580. And there's nothing, majorly negative on this particular counter. So going forward, I think eventually, once we see the stock, trending above that 710, 720 mark confidently, there's a good sign of a rounding bottom formation getting activated. The targets for the same could be somewhere close to around 1240, 1280. So probably, going forward, we may see some revisions on the higher side. But as of now, from a trading perspective, 580 should be the stop loss, and the position should be reviewed somewhere close to 710.
Right, those are the levels to watch out for in PB Fintech. We had a query on the same from Debu K. Hope that answers your query. Before I move on to the MC exclusive, let me also get in a query on PI Industries. This one is coming in from Rupak Mehta, and he wants to know whether one should hold on to this stock. Given the fact that the stock has seen quite a good up move in the last 1 month or thereabouts, it's up somewhere around 7%, and on a YTD basis also, it's not done pretty much that well. But what should one do with the PI Industries? Should one hold on or look to exit on rallies?
Well, the long-term charts are still positive, despite of the fact that it has been consolidating within a major band. 3600 remains a supply pressure point, but on the lower side, we have seen multiple times this particular stock, taking support at around 3000, and we have seen some confident reversals from that particular juncture. So unless this particular level holds, probably you can maintain a stop loss on a weekly closing basis below 2930. And still accumulate this particular counter. If you look at its weekly setup, the weekly RSI is still quoting somewhere close to around 54. So there is enough scope or headroom for the stock to surpass that 3600 mark and move forward. So I think I would recommend accumulation for this particular counter. Even on declines, this looks like a healthy setup. The stop loss should be placed at around 2930 on a weekly closing basis. And in case if we keep a longer term horizon of plus 1 year, then probably we may see this stock scaling back to around 4000 levels.
Right, buy on dips is the call on PI Industries. Hold that thought, Sacchitanand. I have with me on call Ashwin Mohan, who's reported this exclusive story that Glenmark Pharma, that holds somewhere around 82% stake in Glenmark Life, is looking to reduce its debt burden via a stake sale in Glenmark Life. And marquee PE giants are also lining up for this stake. Good morning, Ashwin. Good to have you on the show. Take it away and tell us more about this exclusive that you broke last night.
Good morning, Amrita. So this is essentially a debt reduction exercise that is being undertaken by the parent of the target. The target in this case is the subsidiary Glenmark Life Sciences, which is an API maker, active pharmaceutical ingredients maker. The parent, which is Glenmark Pharmaceuticals, wants to reduce its debt. Its net debt stood at around 2,600 odd crores at the end of December 2022. So what we're given to understand is that a raft of top private equity funds, and we are talking about the likes of Blackstone, KKR, BPEA Equity, even PAG. These are the kind of funds that have expressed preliminary interest as part of initial bids for this proposed transaction. In fact, there's also a very interesting strategic player, Nandita, that has entered the fray, and this is the Nirma Group. Now, this is the same detergents to cement conglomerate, which is based out of Ahmedabad. They, I believe, are now looking at the pharma sector in a big way. So they are also another player that has thrown their hat in the ring. Kotak Mahindra Capital is the investment bank that is managing the entire sell-side process. Going ahead, we'll have to wait and watch to see which of these bidders get shortlisted for the forthcoming rounds. But clearly, this will be one of the stocks in focus today. Glenmark parent looking to pare debt, and a lot of interest from some of the buyout private equity funds, including the Nirma Group, for their API subsidiary, which of course got listed a few years back.
All right, Ashwin, thanks a lot for getting us all those exclusive details on this story. Sacchitanand, coming to you, what is your take on Glenmark, given the fact that, the company reported lower profits in Q4, and because of that, the stock saw a fair bit of correction yesterday, down somewhere around 3% or thereabouts. What should one do with a Glenmark and maybe a Glenmark Life Sciences as well?
Both the stocks are trending well. They are in their bullish territory. But when it comes to Glenmark, I think the resistance at 620 would be important. So in case if we see that particular resistance again getting breached, then probably we may see one more fresh leg on the upside. And the level of around 680 could be challenged. But when it comes to Glenmark Life, the consolidation for the last 3 weeks has been healthy. And, there's some bit of confidence that this particular move can extend its legs towards 580. So I think given a choice, I would rather take a bet on, Glenmark Life, keeping a stop loss somewhere close to around 515 on a weekly closing basis for a potential target of around 580.
Right, that's the call on the Glenmark twins. But I also want to get in your thoughts on Adani group of shares, Adani Enterprises. I think 19% kind of a rally yesterday. It's, I think, recouped all the losses that it has seen rather since January. We have a couple of queries coming in on the Adani group of stocks. Kinky has written in and she wants to know what should she be doing with Adani Enterprises. So how would you approach these stocks now?
So even right now, we are optimistic on this particular counter. Both Adani Enterprises and Adani Ports, these counters were recommended yesterday on your sister channel as well. So when it comes to Adani Enterprises, clearly the momentum is so strong that probably we may see one more swing towards 2450, 2480 kind of a zone. So in case if someone is still holding on to this particular counter, the trailing stop loss from here on should be placed at around 2280. For a potential target of around 2450. And when it comes to Adani Ports, the immediate resistance for the stock is now placed at around 740. So in case if we see that particular mark getting breached in today's session itself, then the trajectory opens up till 765. So even here, some longs can be built in, but it will be a conditional call above 740. And once that particular level is triggered on the higher side, the stop loss can be placed at around 732 for a potential target of around 765.
Right, that's the call on the Adani group of stocks. Couple of queries also coming in on BPCL. Of course, the company has reported a strong set of numbers. GRMs north of 20%. Would you expect an up move in today's session?
We are expecting a move towards 385, 390 kind of a zone eventually. The floor is very well set at around 350 zone. So unless we don't see BPCL slipping below that particular level, the higher top higher bottom sequence of the bullish trajectory remains open. Eventually we see this particular counter reconquering that zone of around 440. But as of now, from a trading perspective, 385 could be the target.
Right, one last query for the day. This one is coming in from Rakesh and he wants to know your thoughts on JSW Energy. He says that he holds 500 shares at an average cost of 270 rupees per share and he wants to know when it would hit levels of somewhere around 350 or thereabouts.
Very difficult to give a timeline here, but as of now, the stock is in a consolidation mode. There's nothing negative in the stock right now. The overall range that the stock is exhibiting is around 230 on the lower side, and on the higher side, 280 has been a very strong cluster resistance. So once we see a breakout about 280, then probably the journey towards 340, 360 could be, could happen in a very quick pace. But as of now, I think the stock is consolidating. So probably you can keep a stop loss somewhere close to around 220 on a weekly closing basis and keep implementing this particular counter for a potential target of around 340 eventually.
All right, that's the call on JSW Energy. With that, we've come to the end of this query segment. But Sacchitanand, before I let you go, leave us with some stock recommendations for viewers.
Well, Nandita, two stock ideas from my end, both from the buzzing sectors that were trending yesterday. First one is metals, where we like Vedanta. We have recommended this particular trade setup to our clients. So after 3 weeks of consolidation, eventually we have seen a strong breakout about that 285 mark. We're expecting this particular momentum to get carried forward. We may see a swing towards the 200 exponential moving average, which is placed around 295. So we're recommending long positions here with a stop loss at around 282. The other stock that we have recommended is L&T Technology Services. Again, the stock is oscillating well within an upward rising channel. The upper end of this particular channel is placed somewhere close to around 4120. That will be a potential target. The stop loss from a trading perspective should be placed at around 3880, and still we are recommending long positions here.
All right, Vedanta and L&T Tech, two stock recommendations coming in from Sacchitanand. With that, Sacchitanand, thanks a lot for taking out time and joining in this morning and addressing all of your queries as well. Well, completely timed out on this edition of Morning Trade, but don't go anywhere because coming up next is Opening Bell. Thanks a lot for watching and stay tuned to Money Control.